Davis. I'm back to do another video. I want to welcome back all my subscribers and welcome to my new viewers. This is the channel where we talk about my top stocks. We also talk about generational wealth. I want to thank the new subscribers, Janelle Pulley, Jerry C, for subscribing to the channel. Thank you for taking your time to subscribe, and I hope that you click the notifications to get my frequent updates. Okay, so we're going to talk about 4 stocks today. Just going to talk about a few. This week is earnings call for a few companies, but one stock before we jump into earnings calls. Ford Motor Company, this Friday, stock jumped over 10%. If we look at the stock on Friday, jumped over 9.61%, and then another 0.56. So let's just say 10% on Friday. And if we look at the stock forecast, it's projected to go $24. So keep your eye on Ford Motor Company. Okay. Also, if you look at the stock charts, the technicals, stockcharts.com, and I've already pre-populated it. But if you look at the chart, it looks pretty healthy. Anything that's trading above this blue line is kind of the direction of the stock. But then you have the what they call the RSI. Generally, you want this RSI to sit here right at $50. So this stock may fall back some. So if the stock falls back some, it should fall back to this blue line right here at $17. But it's healthy anywhere from 50 RSI and below here up until 30. So this is a good chart. Technical analysis, you want to look at Ford Motor Company using stockcharts.com. Another stock that I want you to keep an eye on is ChargePoint, ticker symbol CHPT. ChargePoint is a charging station type company. They are out of California, Campbell, California, and it's trading right now about $20 per share. Keep your eye out on ChargePoint. Over the last few months, the stock has seen some heights as high as $27 per share. I think once this thing settles out at $20 or $19, this thing will head back to the direction of earlier this year, back up to this $26, $27 per share. So keep your eye out on ChargePoint. They don't pay a dividend because they are a growth stock. So keep your eye out on ChargePoint to see where it settles and see if it starts charging back toward this $26 per share. Also, if you look at the stock chart, the technicals, it does not look pretty. So if you look at it's at the low end of the RSI. It should stay between here, the risk index, the RSI. Hopefully it can get back up to this 50 and stabilize. Also, if you notice here, this stock has fallen through the blue line. Now, they did have earnings call about 2 weeks ago, and it was pretty, I guess it was boring. Wasn't that exciting. They didn't give a lot of outlook, but I did hear that ChargePoint says within the next year they should be profitable. So this could be a good sign, could be a turnaround. The stock could be stabilizing right back here at $23 per share. And as you know, right now it's trading below $23 per share. But again, keep your eye on ChargePoint. This has to do with the electrification of the economy. You got other companies like Lucid and others, but ChargePoint, I think right now is still at a good entry point of $20 per share. So keep your eye out on ChargePoint. Now let me get to earnings calls for this week. 3 stocks that I wanted to take a quick look at. We're on earningswhisper.com, and 3 stocks I wanted to briefly look at was FedEx, which reports on Thursday the 16th, Nike, which reports on next Monday the 20th, and Darden Restaurants, which reports on Friday the 17th. So that's this Friday. Darden, which is, companies like Olive Garden. They are based out of California, but they host, basically it's a stock for restaurants. So it's Olive Garden and a few others. So if we look at Darden's subsidiaries, Olive Garden, Longhorn Steakhouse, Red Lobster, and much, much more. So I think this much, much more is, let's see, Darden's controls Olive Garden, Long Steak, Red Lobster, Cheddar's, Yard House, Bahama Breeze, The Capitol Grill, Seasons 52, Eddie's, Prime Rib, and a whole host of restaurants that are very similar to that fast casual. So that's what's earnings call this week is Darden's. Darden's will report revenue on this Friday. So keep your eye on Darden's. So let me get to the first stock, which is FedEx. FedEx will report this Thursday. And for the last 5 days, it's been choppy, or it's kind of been flat, up 1% over the last 5 days. Trading right about 246 per share. FedEx, ticker symbol FDX. They do a lot of shipping around the United States. They compete a lot with UPS. FedEx Corporation is an American multinational conglomerate holding focus on transportation, e-commerce, and business services headquartered out of Memphis, Tennessee. So they have a 52-week low of $216 and a 52-week high of $319. So it's a tough time of the year right now for FedEx, delivering all the packages for Christmas. And they also are having some labor issues, finding enough people to, cover their shifts at the distribution centers to package up the goods, to get them onto the planes or get them onto the trucks. But FedEx right now is trading about $246 per share. And we'll see this Friday if they beat Wall Street estimates. That means guidance as far as revenue expectations. So if they think that they're going to do 1 billion per quarter this past quarter, let's see if they did that. And then, if they're within a couple of 100,000, Wall Street will cut them some slack. But it's been a rough go for FedEx this year. We'll see what happens. We'll see if the revenue call gets to stop going into the right direction. See if it gets a 5-10% pop after the meeting. And then, that'll be this Friday. This Thursday, FedEx reports on 12/16. So again, that's FedEx. Show report earnings call. So check out FedEx. The next stock ticker to talk about today is Darden. Let's see here. Darden, it looks like a healthy stock this year. It trades right about 150 something dollars per share. It was as low as 52-week low 110 and has a high of 164. Now, earlier this year, you could have got a bargain on Darden. Some of those famous restaurants like Olive Garden, Longhorn Steakhouse, and Red Lobster, because restaurants were slow to open, but then the stock got going. So we look at over the year, the stock opened in January at 116, and now is up over 30%. So we'll see what Darden has to offer. Again, it's a nice quality stock. They have a nice book of restaurants they own in their portfolio, and they also do pay a dividend. So if you shop or you eat at any of these restaurants, Yard House, Olive Garden, Longhorn Steakhouse, Red Lobster, etc., it may be a good time to invest in Darden's restaurants. So that's Darden's Restaurants, and they have a ticker symbol of DRI. So that's Darden Restaurants Incorporated. Okay. And then the last ticker I want to talk about today is one of my favorite is Nike. Nike is a great stock, and it does pay a dividend, and it trades anywhere from about $150 per share up to $179 per share. Now, Nike does pay a dividend of 0.72, but it does usually have some growth over the years. So we look at the year for Nike. The stock last Back in January, it's trading at 140 per share, and today it's trading at 169 and is up over 24%. So that is Nike, ticker symbol NKE. Such a good company to be part of. They do a lot of distribution of sneakers around the world. In the Asian market, they do very well, and they were founded back in 1964. So this is Nike, ticker symbol NKE, pays a dividend of 0.72, and it has a 52-week high of 179. So those were the three stocks I wanted to talk about this week because basically they will be reporting earnings. Nike on next Monday, but the other two, Darden reports on Friday and FedEx reports on Thursday. So I want to thank you for watching. Thank you for listening. Please like, share. And if you like some free stock from Robinhood, don't forget to use my link below. Have a good evening.